Hello and good day, ladies and gentlemen. Here with Martin Bennett, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting with North American markets, the Dow Jones yesterday 15 points up, as well as the high-tech NASDAQ. The Dixie Index is also in uptrend, a little bit up, but then again, staying steady. Initial jobless claims yesterday in the U.S., 1,000 weaker than the expectations. Chicago Purchasing Managers Index came out better than the expectations, and gross domestic product in Canada month-on-month showed 0.1% up. U.S. stocks gained third session in a row on expectations for more accommodative policies from global central banks following the UK exit last week. The gains were the best three-day climb for the main stock market gap since the end of February. Markets were boosted by reports indicating the European Central Bank is weighting changes to its bond buying program, while the Bank of England also said they're all in. The Canadian economy expanded by 0.1% in April, as expected, lifted by gains in manufacturing, utilities, and the public sector. Components of the GDP report revealed that activity in the mining, quarrying, and oil and gas extraction sectors were down 1.4%, its third consecutive monthly decline. Leading inflation reports suggested upward pressure on the overall price levels, and the raw materials price index jumped to 6.7% versus the 4.9% forecast. While the industrial product price index rose 1.1% versus the projected 0.4%. Today, ISM manufacturing PMI, Markit manufacturing PMI, ISM prices paid, and construction spending month-on-month reports coming out from America. Next week's most interesting events from the North American markets would be the FOMC minutes on Wednesday, and unemployment rate and the non-farm payrolls on Friday. Moving to the European markets, yesterday the German DAX 30 300 points range, 120 up, and the CAC 40 150 range and 90 up. Both indexes are currently at a second major resistance level. German retail sales month-on-month 0.9% versus 0.6% expected. And previous minus 0.9. French CPI, consumer spending, better than the expectations. Swiss KOF economic barometer was again a little bit down from the expectations. German unemployment minus 6,000 versus 5 expected, and minus 11 previous. Eurozone flash came out again pretty much as expected. With a little bit of an uptick. The upcoming events, Swiss retail sales report, Markit manufacturing PMI from all over the European Union. That would be Italy, France, Germany, Spain, Greece, and the UK. Unemployment reports for the European zone as well as expected today. Moving to the British markets, the FTSE 100 gained 213 points yesterday, closed at 6,505. Yesterday, GDP year-on-year 2% and quarter-on-quarter 4% as expected. Total business investment year-on-year, quarter-on-quarter minus 0.8% and minus 0.6%. Index of services 0.5%. The current account came out 32.59 billion pounds. Sterling halted its two-day upward momentum yesterday as the Bank of England Governor Mr. Carney signaled that the BoE may introduce interest rate cuts and looser monetary policy this summer as a means to tackle the Brexit effects on the economy. A spike in inflation is also to be expected in the upcoming future. As a result, the pound dropped by almost 1% versus the greenback and 0.7% versus the euro. Meanwhile, the political chaos in Britain continues as Mr. Boris Johnson has been pretty much backstabbed by his fellow Leave campaigner Mr. Gove announced that he will not be supporting Johnson anymore, and he has declared himself as a possible Tory leader. In numbers, the cable 105 pips down yesterday from 330 range versus the yen almost 100 pips, 335 range versus the Aussie 130 pips down yesterday from over 400 range versus the loonie, the Canadian dollar 125 pips down yesterday, again 330 pips range versus the Kiwi 215 pips down yesterday, almost 500 pips range versus the Swissy 165 pips down from a 330 pips range yesterday. Market manufacturing PMI would be the main report for the UK markets today. Asian markets, yesterday the Nikkei 225 went 60 points down. It's still going down today as we speak. Yesterday, Tenkan, large manufacturers outlook, better than expected, better than previous. Non-manufacturing as expected, but 3 points worse than previous. And large all industry capex for the second quarter, again, better than the expectations and better than previous. The jobs applicants ratio, again, 0.01 point better than the expectations. Unemployment rate as previous and as per the expectations at 3.2%. Overall household spending year-on-year 0.3% better than the expectations and 0.7 worse than previous. The national CPI, all of the CPI reports came out to the negative territory. Pretty much we had all of those reports coming slightly worse than previous and as expectations. Basically, the Tokyo CPI numbers also as previous or worse than previous and worse than expected, excluding food and energy. All of the reports pretty much not a good sign over there with the inflation in Japan. China's official PMI matches estimates. The Caixin gauge misses. In numbers, the NBS manufacturing PMI 50 points as expectations and 0.1 worse than previous. Also, the Caixin manufacturing PMI 0.5 worse than the expectations and worse than previous. Non-manufacturing PMI better than previous at 53.7. Moving to the commodity sector, the S&P 500 index had a range of 35 points, still uptrending to currently the level is 2085. EIA natural gas storage change yesterday. The storage in the US in the week ended June 24th rose by 37 billion British thermal units below forecasts. US natural gas futures hold on solid gains in North America trade yesterday after data showed that the natural gas supplies and storage in the US rose less than expected last week. Natural gas is trading currently at $2.90. At the moment, the range yesterday was 8 cents. Gold had a range of $14 up to 1,331. Silver had a range of 67 cents, and WTI also had a range of $1.40. Baker Hughes oil rig count is due today. The most volatile events for the upcoming week are on Monday. Mr. Mario Draghi will have a speech. Tuesday, the RBA rate decision and statement are due from the Pacific markets. Wednesday, non-monetary policy ECB meeting. Thursday, UK gross domestic product estimate for the second quarter. And Friday, Swiss unemployment. No surprises there. US unemployment and non-farm payrolls are also due. Thank you very much for your attention. I wish you a successful trading day. Cheers.